Hi traders, you're welcome back to the Forex Geek channel. Have you ever entered a trade just to watch price pull back and stop you out, only to see it reverse and go exactly where you thought it would? Or maybe you tried trading a breakout only to fall into a fake out trap? If that sounds familiar, you are in the right place. Alright, in this video we are going to be breaking down the pullback and breakout strategy, showing you exactly when to enter, how to confirm strong moves, and most importantly, how to avoid getting caught in bad trades. So let us get into it. Alright, first of all, let us define these two strategies. A pullback, alright, a pullback is a temporary price retracement. All right, it's a temporary price retracement within a trend. So now we have a sell trend, right? This is a sell trend. So this is the actual move in the direction of the trend, and this is a pullback. This is a move in the direction of the trend, right? And this is a pullback. This is a move in the direction of the trend. We call it an impulse move. This is an impulse move. This is a corrective move. This is an impulse move. This is a corrective move. This is an impulse move. So pullbacks are just temporary retracements within the trend. So if you are in a sell trend, pullbacks are going to be in the buying direction. If you are in a buy trend, pullbacks are going to be in the selling direction. Okay, it's as easy as that. So in this example now, this is the impulse move. This is a pullback. This is an impulse move, and this is a pullback. All right, so that is simply what a pullback is. Okay, now instead of chasing a moving market, traders usually wait for price to pull back to a key level before entering a trade. This allows for better risk management and a stronger entry. Okay, on the other hand, a breakout happens when price moves beyond a key support or resistance level with strong momentum. All right, for example, we can see what happened around here, right? We can see that we actually had a support zone around here. If I'm going to date this back, I'm going to take okay. So this seems to be a zone, but it's quite a wide zone though, right? It's quite a wide zone. You can see we had multiple rejections here. We had a fake out here. Can you see? We had a fake. Don't worry, we're going to come back to that. So we can see that we had multiple rejections, and then here we actually had a breakout, right? So a breakout occurs when price moves beyond a key support. In this case, it was a key support or a key resistance with strong momentum. Breakouts can signal the start of a new trend or continuation of an existing one. So both strategies actually work well, but the key is knowing when to use each one. So now let's talk about pullbacks first. Pullbacks give traders a chance to enter a trade at a better price. For example, this is a sell trend, right? So you want to be looking for sell opportunities. So instead of just selling here, you wait for a pullback and then you sell at a better price, so that you will know that when the continuation occurs, you are going to ride the continuation completely instead of just joining halfway. So when you want to ride a trend, it's better to join after a pullback. All right, so looking for higher highs and higher lows in an uptrend, or lower highs and lower lows in a downtrend. Secondly, use key levels for your entries. Okay, the best pullbacks happen at strong support and resistance zones, or if you want to use moving averages, that's fine. You can use the 50 EMA or the 200 EMA, that is for your dynamic support and resistance levels, or you can just manually plot your trend lines and identify your horizontal levels, okay, so that you watch out for those important support and resistance zones where price could possibly pull back. So you can also take advantage of Fibonacci levels as well. Okay, then ensure you confirm with price action. You can look for bullish, engulfing candles or pin bars or doji, near key levels, near resistance levels or support levels, okay, that's going to be to confirm your reversal, okay, and then ensure to use volume indicators. Volume indicators really come in handy, okay, because a decrease in volume during a pullback, and an increase on the bounce confirms strength. For example, we can see that here where we had this pullback, the volume was low, right? But then as the trend was resuming, can you see that we had an increase in volume? You can see this spike. There was an increase in volume, okay? So it doesn't have to necessarily be a very long spike, okay? But basically, just watch out for increase in the histogram bars for the volume, okay? You can see the increase in the histogram. Let's use this as an example. Can you see that after this pullback, can you see that there was an increase here? Can you see it doesn't have to be so long, but so long as there is an increase, it can show that that continuation is quite valid. All right, but ensure that you always confirm, okay, get your confirmations including your price action, all right, like candlestick patterns, whether bullish or bearish candlestick patterns as the case may be. Okay, then now talking about breakouts, right? Talking about breakouts, the biggest mistake traders make is entering breakouts too early, only to get caught in a fake out. Like what happened here, this was a resistance zone, right? And it looked as if price broke out of that resistance, but you will notice that shortly afterwards the price came down back. So do not rush into a breakout because it could be a fake out. All right, so here's how to do it right. First of all, identify consolidations. For example, we can say we had a consolidation zone around here, right? So a good breakout setup usually forms after price ranges for a while near key support or resistance levels. Then you wait for a strong break. So after that strong break happens, don't jump in immediately, okay? The candle has to close beyond the level. For example, here we can see that the spike happened, and this candle, can you see this massive rejection? The length of the wick is so long that the body looks like a mat with a very long pillar on top of the mat. So we can see that this was a strong rejection candle. So do not just jump in. Wait for the candle to close above that breakout. The candle should close above it. That's if it's a bullish breakout. If it's a bearish breakout, the candle should close below it. Then always get confirmation from your volumes. All right, get volume confirmation is crucial because a breakout with low volume is usually a fake out. All right, now also use retest for safer entries. Instead of jumping in immediately, wait for the price to break out and pull back and retest the broken level, and then to continue before in the direction of the breakout before you enter. For example, after this breakout happens, there should be a retest and then a continuation that you can now join once the continuation has been confirmed, instead of just jumping into the trade immediately after the breakout or the seemingly or the apparent breakout happens, because in this case it was a fake out, right? Then you make sure you manage your risk. Place your stop loss below the breakout level or below the last swing low to protect your trade. Okay, that's if it's a bullish breakout. If it's a bearish breakout, it's going to be above your last swing high. All right, so when should you use a pullback strategy and when should you trade breakouts? Now you should use a pullback strategy when the market is trending. Pullbacks are for trending markets. All right, pullbacks are for trending markets. So you only use pullback strategies when the market is trending and you want to enter at a safer point, right? For example, this is a buy trend. I want to enter at a safer point, so I enter after a pullback instead of just jumping in here. I wait for a pullback and then enter. Okay, so get a better risk to reward ratio. Then use your breakout strategy when price is breaking out of a strong level with momentum. Okay, a strong level with momentum, signaling a potential new trend. Okay, let's see if we can get a good example. All right, we can see that we had a consolidation around here, and then we had a breakout. Although this was more like a gradual move, this was not a tight consolidation though. But let me just use this as an example because we had quite a level of consolidation, and then we had a breakout and kind of a brief retest. Can you see what happened here? Can you see that we had kind of a brief retest and then we had a continuation? Okay, in this case you can see that we had a consolidation around here, and then you can see that we had a breakout, and you can see that we had a retest, and then we had a continuation. So that is it for breakout. Just make sure you always have your retest and your continuation pattern. The best traders know how to switch between both strategies, okay, both the breakout and the pullback strategies, depending on market condition. So if you're serious about improving your trading, Mastering pullbacks and breakouts is essential. By using these strategies correctly, you'll avoid bad trades and take high probability setups instead. But don't just take my word for it, okay? Test these methods on your charts and see the difference for yourself. If this video helps you, hit that like button and subscribe for more trading content. And don't forget to turn on notifications so you never miss a new upload. In the meantime, thank you for watching and happy trading.